Hello, everyone, and welcome to this Your Overseas Home Q&A on Spanish mortgages. My name is Julian Benson. I'm a writer here at Your Overseas Home, and I'm joined today by Tim French from EMAC, the Spanish Mortgage Advice Centre. He's an advisor specialising in overseas buyers looking for a Spanish mortgage. EMAC is a team of bilingual Spanish and UK qualified mortgage advisors who work with all major lenders to secure the best mortgage products across Spain. Tim, thanks so much for taking the time to join us today.
You're welcome. Thanks. It's good to be here.
Awesome. Really, as much as we may want to focus on what buying a home in Spain means in terms of endless sun, amazing food, sort of just warm all year round, it's actually really important that we do take a bit of time to talk more about these sort of financial products, getting the right mortgage for you, because it will really dictate a lot of the comfort that you'll have when you're living overseas, depending on what your mortgage rate is or how long your terms are. So it is really important that we spend a bit of time talking about that today. Today is a Q&A, so please do use the question panel on the right side of the screen to put your questions forward to Tim. This is a really good opportunity to be able to speak to someone who spends their entire working day with people like yourself who are trying to buy overseas. And so it's really good as an opportunity to ask questions which are maybe not entirely specific to your circumstances, because if it went very, very granular, then really the best thing you can do is to use that QR code that Tim's got on the screen and book a one-on-one consultation. But if you've got broad questions about what it's going to be like buying in Spain, this is a really good opportunity to ask them and to talk it through. A little bit of housekeeping before I start asking some questions of Tim. This is going to be recorded. So this webinar is going to be available on the Your Overseas Home website. We're also going to send around a link at the other end of the call today, so that you'll be able to watch it again yourself or to share it with other people. But before one very final thing before getting to the questions, I will just say again, we've got a QR code on the screen and all of Tim's contact details. After this webinar, if you've still got questions, if you want to have a one-on-one call and really sort of be able to find out how your situation and brain absolutely melting here in this room, how you would be, what sort of a mortgage would best fit you when you're buying in Spain, then that's a really good way to talk through your situation and find out what options are available to you. Anyway, sorry, that has derailed me entirely. So let's instead get on to a bit of some questioning. Tim, if we could first ask actually a little bit about yourself and about the company, and can you tell us what you do to help clients out?
Okay, so yeah, so I've been based in Spain 21 years now, fully regulated, registered with the Bank of Spain, and qualified as a mortgage broker in Spain. My job as a mortgage broker is to make sure when I speak to clients that we, establish that they can get a mortgage before clients then go on and start looking for properties and making reservations on a property. So it's a good idea that we speak to them early doors to so they're aware of their financial situation and their chances of getting a mortgage before they then come out to Spain and start, getting excited about reserving a property.
Fantastic. And so actually, I don't want to go too granular too early, but actually in terms of the flexibility when it comes to mortgages that are available to people, what sort of things would you be asking someone on those consultation calls, and what sort of are there things like mortgages with cashback, or is it more about sort of the length of repayment terms that you're adjusting? What sort of things are you able to do for a client?
First of all, I like to find out how much these clients have got to actually put into a deal, because sometimes they don't realise that the maximum mortgage is 70%, so they need a 30% deposit minimum. Plus, depending on which area they buy in, the closing costs can range between 9-10% to 14-15%. So first of all, to establish how much clients have actually got to put into the deal, and then establish to them how much mortgage they're going to get and how much they need to put in. So that's the most important thing at the start, is finding that out. Then, finding out what their declared income are, their net incomes, because the banks in Spain don't want to know your gross income, they want to know what your net income is. So your net income if you're employed on your P60s, or self-employed, or somebody owns their own company, what their net income is after tax, after dividends and their self-employed income. So that's the next question we need to establish. So it's a good idea when I have a telephone conversation with them, they have this information to hand. or if they don't, then we, rearrange another call to find that out as well. Another important factor is age, because terms in Spain generally only go up to age 75. One lender of mine will take it to age 80. But so if somebody's 60 years old, then 15-year term is generally the longest, or with one lender up to age 80. But we then need to provide pension provision, proof of pension provision as well. So they're three important things we need to establish as well.
Absolutely. And so as well, like I suppose what you were saying there about needing to have a deposit of around about 30%, is that a standard for overseas buyers? Is that something which is specific to Spain?
For non-residents, yeah, 30%, 70% loan to value is the maximum. So yes, a 30% deposit and the closing costs. So it can work out as much as 45% of the purchase price they'll need. If they were buying in Andalusia, then on a second-hand property, the purchase tax is 7%, notary, land registry, bank opening commission. So that would come to around 10% with a 30% deposit. So for a resale property in Andalusia, for example, that's about 40% of the purchase price they'll need. In the Comunidad Valenciana, which is where I'm based, with Alicante, the purchase tax for a second-hand property is 10%. So they need to factor in with notary, land registry, and the bank opening commission around 13% for closing costs. So that'd be about 43% of the purchase price. And on new build properties in the entire Spain, it's 10% VAT plus, depending on the area, 1.5 to 2% stamp plus notary, land registry, and bank opening commission. So that can add up to around 14.5% of the purchase price. Plus, they also have lawyers' fees, broker fee, valuation fee to also consider as well. So people need to know that before they get excited about reserving a property.
Right. So if you're in the position of you've decided you're wanting to buy in Spain, you're starting to look at properties online, you're seeing some place that you really like, but even say it's a 300,000 euro property, you should be thinking, before really moving ahead, you're going to need around 40% of that. You're going to be needing that sort of, what's that, sort of 125, 130,000 euros, because that's going to be covering you're going to need a larger deposit. There's going to be closing fees. There's going to be and other fees, those taxes as well that you were talking about.
Yeah, exactly. And it's good idea at the start of that sort of process that they find out that they can get a mortgage. Because if they were to come to Spain and put a reservation fee down and they couldn't get a mortgage, high chance they're going to lose that reservation fee.
Right. And so besides actually having sort of the funds on hand, are there other things which may disqualify them from being able to get a mortgage?
Well, I mean, a bad credit report would obviously be one of them. If somebody's had lots of CCJs and so forth, low credit score, they don't tend to worry so much about a low credit score, but it's mainly affordability. If somebody is a property investor with 20 mortgages, 20 properties, then probably that is going to be very difficult to get approved, because the banks work on generally a 35% debt to income affordability ratio. So they'll take whatever your mortgages and loans that they have in the UK plus what the Spanish mortgage will be, and those payments divide by your net income or joint net income can't be any higher than generally 35%. I mean, I have a couple of lenders who are stretched to 40% with good incomes. But if somebody's got lots and lots of mortgages, and then you divide all those mortgages by net income, even if they have the rental income, it makes it very tight.
Absolutely.
So you need to establish at the very beginning with telephone call, and then I have a fact find which I send to the clients, which they can complete, and then once I have all that information, I can know pretty much straight away whether they will get a mortgage or not. So it's just from experience and knowing what all the lenders' criteria are. And once we do have all that paperwork, I can then get a decision in principle officially from the lender as well.
Can you talk us through a few more steps from there to the point that the property's exchanged and the owner's got the key in hand? I mean, after that first call with you, what is it that's happening in between there and the purchase?
Yeah, so from once I first have that first telephone conversation with the client. I then send them an email with a list of all the documents I'm going to need, plus my fact find. Once the clients send me everything back and I have everything ready to package and submit to the lender, I generally get a decision then in principle within three to 7 days, depending on how good the case is and how busy the lenders are. Once we have that decision in principle, we then need to, once the clients have already reserved the property, we then need to open a bank account and order a valuation. I can order the valuation directly with some valuation companies like Tinser or Gloval, for example. That can save time doing it this way. Meanwhile, we can get the bank account opened. Once we have the valuation report back and the bank account's opened, then the bank's legal department and central department need to produce the binding offer. And that binding offer and other related mortgage documents get sent to the notary of the buyer's choice. Once they've been sent to that notary, the following day, the 10-day calling off period can start. During that 10-day calling off period, the transparency can be signed by the client in person, or if the client has a lawyer with power of attorney, he does that also, or she does that also. And then after the 10-day calling off period is finished, the deeds can be signed and the clients get their keys. So depending on how fast it needs to be completed by, I do it sometimes as quick as 5 weeks, but generally it can be 6 to 8, depending on factors really. But if it needs to be fast, I can get it done really fast.
Awesome, thank you. So we've actually got some questions starting to come in from viewers, and they're touching on some of the things we've already spoken about and asking for a bit more detail. So, for instance, we've got one from a viewer saying that if they were employed, they are employed, is there roughly a minimum salary that would be required for a property of, say, €100,000? I'm assuming we're working with the idea that they've got that 30% deposit already in place.
Yeah, so if there's €100,000 purchase price, then the mortgage is going to be €70,000. Let's just say it's a 20-year term. Then it's not easy to say a minimum amount. It's based on affordability. So depending on how many mortgages and loans that they would have. So let's say they have no mortgages and loans in the UK, and it's just their income versus the Spanish mortgage. Then the Spanish mortgage is going to be around €400 a month. So technically, then it could be €2,000 a month would be plenty.
Yeah, well, excellent. And actually, I'll say to anyone who's thinking, sort of looking for hard numbers and trying to work out is their salary going to be enough for the property value they're looking for, this is exactly a moment when you would want to be booking a consultation with Tim separate to this, where you can sort of talk about your income, what your current circumstances are. Do you already own a property, say in the UK? Do you have a mortgage that you're still paying off? Are you planning on retaining that property or selling that property? These sorts of level of details is exactly what you can get into when you have your one-on-one call. And so another question from a viewer is saying, if you have a deposit and you need a small mortgage, but your income is coming from pensions only, is that possible? Is that an income that would qualify?
Yep, we have to obviously provide the pension statements and the bank statements to prove that the pension income is getting paid into you. But yes, and also depending on the age of the client as well. As I say, terms generally only go up to age 75. One lender goes to age 80. So all depends on those factors. But yeah, no problem. We have I've got mortgages before for clients who are in their retirement.
Fantastic. And actually a question about Spanish banks, saying you've mentioned that one lender who goes up to 80, or you've got different lenders who are offering obviously different terms. Do Spanish banks as standard offer mortgages to non-residents, or is that, have you got sort of a small select group you're working with?
Well, some banks don't, but I have a panel of 5 to 6 lenders who work with non-residents, and majority of my clients and my business is not to non-residents, so not just from the UK, from other parts of the EU, America, Middle East, so cover quite a wide range of nationalities.
Fantastic.
With loans up to 70% as well, which is still pretty good.
I was going to ask actually, with the comparing, say, UK to US to Middle Eastern buyers, is the process very much the same for all of them, or does each country have its own specific processes that you have to go through with them?
Pretty much the same. The documents we request is pretty standard throughout. Some countries don't have a Experian credit report like we have, but apart from that, if it's in a language, like I have a lot of clients from Czech Republic, for example, their documents, if they can't be downloaded into English or Spanish, then they have to be officially translated from an official registered translator. So that's the only difference. If it's for example, from Czech Republic or other countries that is non-English or Spanish, then those paperwork has to be officially translated.
Oh, fantastic. And so actually, we've had a question coming in, which is about sort of the I suppose, sort of when you would apply for the mortgage. Obviously in the UK, we have things like mortgages in principle. You can work out what you're able to borrow before you start looking for a property. And again, is this something which you both can do in Spain, and are you required to do in Spain?
Not required, but I recommend it, because as I've touched on already, that the clients can go over to Spain with whichever real estate agent they're with, and if they find a property that they like, they're able to then pay a reservation with confidence, knowing that they're not going to lose that reservation. So it's very important, I think, to do that early doors, so the clients are going out with confidence, and and also shortens the mortgage process.
Yeah, and absolutely, it's one of the things which does come up a lot with the people we work with, is that sense of, particularly if it's who's doing their first buy overseas, is that idea of, if you get that mortgage in principle, you get these sort of documents sorted out before you start your search, just have a lot more confidence about what you can actually afford.
And also, there's a lot of people interested, a lot of clients are interested in the same property, and you've got a lot of agents who are motivated as well to get that property sold as quick as possible. So there's no point in them coming out, seeing the property they like, and then starting the mortgage process, because within that time somebody else may have bought it or reserved it as well.
Yeah, absolutely. Well, I was wondering as well, like, and when it comes to what mortgages are available to an overseas buyer, are there any things that sort of is off the table that you would normally expect to be able to find, or are there any options which are available that you wouldn't normally find domestically? Just an example of this, I mean, from the way you've been talking about it already, you wouldn't be able to find a 5% deposit mortgage as an overseas buyer like you might be able to find in the UK. But are there any of these sorts of types of mortgages that people should be not expecting, or other options which are available in Spain that they may not have come across themselves?
Well, first of all, there's no interest-only mortgages in Spain. It's straight repayment mortgage. So that's one thing which somebody who has a buy-to-let mortgage in the UK would expect as an interest-only. But there's no such thing as a buy-to-let mortgage in Spain. It's just repayment mortgage for the entire term. So that's the one thing. I mean, mortgages in Spain are pretty simple, really. It's, as I say, straight repayment. The interest rates are, I think, are really, really competitive. I mean, the Euribor rate today is 2.08. We can get fixed rate for the term of the mortgage, a 20-year term, for 3.1%, and then that can be reduced by 0.25 for each insurance you take. So if you take the home insurance, 0.25 comes off of that. If you take the alarm system with the lender, another 0.25 comes off of that. So that's down to 2.6 already, and then another 0.25% if you take the life insurance, potentially come down to 2.35 fixed for the term of the mortgage. So interest rates are really good. It's just it's repayment is the main thing. It's a straight repayment, is where people in the UK might be expecting interest only, maybe.
Actually, I suppose just on interest rates, because the European Central Bank cut interest rates 2-3 weeks ago now. Has there already been an impact of that in the rates which are being offered, or is it a little bit more disconnected from the ECB interest rate?
Well, the Euribor the base rate, which the banks are, is based on the 12-year Euribor, 12-month Euribor, and that comes down every, that adjusts every day. And yeah, as I say, today's it's 2.08 when I looked at it, so it's pretty low. Let's say you get fixed rates, you get fixed and variable, you get variable rates. So generally, if it's a fixed and variable, you get maybe 2 years, maybe at say 3% or a bit lower, 2.75. Then it reverts to the tracking the Euribor rate, which could be like Euribor plus 1, for example, Euribor plus 0.75. So on the anniversary of the mortgage, let's say there was a 2-year fixed rate. On the anniversary of the mortgage, it would take what the Euribor rate is at the time. Let's say it is today 2.08, plus they add on the spread, which is 0.75 or 1%. So the rate would be 1.08 for the next year.
And so actually, and you mentioned, did you say there was a 20-year fixed rate available?
Right, yeah, 20 years at 3.1 with the option to reduce it by another 0.75% by taking either home insurance, life insurance, and alarm system with the lender.
Is that typical to, because I'm used to the UK system where it's, you tend to fix for 2, maybe 5 years, but you don't tend to go for a long fix. Is that something in Spain that's more common?
I wouldn't say common. That is in leading mortgage conditions for non-residents, that's for sure. So I mean, after that, one of my lenders offered 10-year fix, but the rate's a bit higher than that. So that is the best. That's the best rate we at the moment. So yeah, other lenders which I have, which are really good with non-residents. It's more like a mixed mortgage, 2 to 3 year fix. Then it reverts to a variable rate.
Fantastic.
There's more
options
if they have, you know, let's say I have clients in Ireland who are Euro based, then they have more options for longer term fixed rates with these other lenders. But for people who are based in England, then that's apart from that 20-year fixed, generally it's more of a mixed and variable, fixed and variable.
Excellent. And so actually a question we've been getting quite often in our webinars whenever it's to do with Spain is that there's this draft bill of 100% tax on property purchases for non-residents, and we're just wondering, sort of, do you have any sort of updates on where that is at the moment? How likely do you think it is that it's going to come in? Should people be considering it when they're thinking about their purchasing plans?
I mean, I've done some research online, like a lot of people. I've listened to some of the Spanish news, and seems like they've presented some draft bill to the Parliament, which has to be, you know, passed at Parliament level. It needs to then get through Senate and Congress to come into law. From what I've read, it's for second-hand, only will be on second-hand properties, and I'm not sure it's going to be 100% purchase tax. I think they meant it's 100% increase in the purchase tax. So if it's 7% in Andalusia, then it'll be then 14%. It's still very up in the air at the moment. I think there's nothing concrete. I think even if it did get passed, there'd be a lot of legal battles through the EU as well. So still a lot up in the air. I think if somebody was buying long, you know, now to complete soon, there's no worries. Maybe if somebody was looking to complete in year, 2 years time, it's something they need to be keeping an eye on.
Fair enough. And so actually, oh, sorry.
I personally don't think it's going to happen, but you know, I wouldn't. And I personally hope it doesn't as well.
Just to say for people who are watching, we're a few minutes away from the end of this Q&A session. So if you've got any questions, this is absolutely the time to put them into the chat. I've actually got one more question for myself, and then if no more have come in, we'll start wrapping up. So really do get your questions in if you're wanting to ask them. So yeah, the question I had really was, if you are planning on letting out the property, is that going to be different from if you're planning to live in the property? If you're planning on keeping it purely as a holiday home for yourself? I mean, the way that you're planning on using the property, is that going to impact the mortgages that are available to you or the terms that you'll be able to get?
The terms are all the same. We generally don't tell the lender if you're planning to rent it out. We say that, you know, it's better just to say you're using it for a holiday home with a view of making some rentals on it as well. But yeah, there's no different in conditions at all.
Fantastic. So actually, we've had a question come in just under the wire, which is, if you're 75 years old, what sort of a mortgage would you be able to get? You've said that there's not many lenders left at that point who would lend to someone who's 75, or is it 76 as the cutoff?
Well, 80 would be the one lender who can go to age 80, so there'd be potential for a 5-year term, but that would mean the repayments would be pretty high depending on the loan amount. One thing I always ask to these, older clients is, do they have any children who can go on the mortgage with them? Because we can use their age, their incomes, and the benefit for the children is that they would be part owners, so there'd be a future potential inheritance tax saving as well. So that's one thing I've done quite a lot with older clients in the past, is they've asked their children to come on the mortgage and the purchase with them.
Fantastic. And then also a question about your services, which is how do you charge? Is it a flat fee, or is it a percentage based?
Yeah, 1% of the mortgage amount, minimum of 1,350. I don't charge anything up front and don't charge anything until the mortgage is signed. You've got the keys, so no fees up front, or everything on completion.
Excellent. Well, Tim, thank you so much for a real scattershot of questions. We've covered lots and lots and lots today, and so I hope you're not feeling too harassed. But thank you so much for taking the time to go through all of this. It's been a real pleasure.
Oh, welcome. Anytime.
Awesome. Well, so for everyone who's watching at home, as I think is coming across from what we've spoken about today, like there is a lot of options available to you if you're buying in Spain. A lot of what is available to you is going to be, adjusted based on what your deposit is, where you're looking to buy, how much you have available to you. The best way to find out the specific mortgage that's going to be right for you is to book a call with Tim, have that conversation, make sure that you've actually done that paperwork and that preparation that's going to make it easy to start booking a viewing trip and finding a property overseas. His contact details are on the screen at the moment. As you can see, there's an email, there's the website you can go to find out more information. Using that QR code, we'll be able to let you book an appointment. So it's extremely easy to do, and I fully recommend that people do. If you found this webinar useful, please do leave us a review on Trustpilot. It's a great way for us to be able to recommend our services to other people. And there should be a link to follow on the screen now if that's something which you would like to do. Similarly as well, we've started taking bookings for our virtual property event in October. You can claim your ticket. It is free, and it's going to be an entire day of webinars and shows and opportunities to speak to people like Tim who are there and able to help you make your overseas dream come true. Thank you again to everyone who has sent in their questions and who has joined us today to watch. Tim, thank you again for answering all of these questions. It's been a real pleasure to be able to ask so much about this and on such a broad sweep of stuff.
You're welcome.
Well, for everyone else, thank you for attending, and please do join us for a few webinars. If I can close some windows, I'll be able to end this call. All right. Thank you. Goodbye.